Today, guys, so we're talking about MACD today. How can we use the MACD and what is MACD? So in the table of contents, we're going to look into the introductions to MACD, the components to MACD, calculations and interpretations of the MACD, the practical applications in Forex trading, using MACD with other indicators, advantages and limitations, and considerations to the MACD. So we're going to be talking about what and how do you use a MACD, the component in MACD, which are the signals and the histogram, the uses of MACD, and advanced strategies, how you can mix a MACD with an indicator. So what is a MACD? A MACD is just a short form for moving average, convergence, divergence. That's it. That's it, to be honest. That's exactly what a MACD is. Now, the components of MACDs, as you can see on the slide, we have the MACD line, which is the blue line. We have the signal line, which is the red line. And we have the histogram, which is the bars, which are the bars you can see on the slide. And all of this together, the combination of it gives the definition and meaning to MACD. And how is a MACD used? So it's used for trends and momentums of prices. With a MACD, you can find the momentum shift in prices. And when you talk about momentum, we're talking about force at which a particular thing is exerted, a force towards a thing, towards an object. So a MACD is just a momentum indicator. So on this slide, we are looking into the MACD itself. So the point of this MACD is, like I said, it uses a moving average. It uses a moving average to calculate the momentum of a trend. So most MACDs are popularly used in an uptrend, and for reversals, and in a downtrend for reversals. So like other moving averages, like the MACD is a moving average. For you to look for reversals, you have to look for a cross within the moving average, within this moving average. So if you're looking for the cross within the moving average, you can see on the slide, the MACD crosses the signal, and the MACD crosses the signal above, indicating a bullish signal. That's so you can see on the picture when it crosses, then below the zero line, it crosses below the zero line, and the MACD crosses below the zero line towards the zero, it automatically gives you a bullish indication, and it shows a very big shift in momentum to the bullish side. And same thing you can see in a bullish trend. You can see the reversals. Like I said, you can see the MACD line. The MACD line crosses the signal line towards the zero area, going down, indicating a reversal. And as you can see, the price automatically falls down. So the MACD uses an EMA, a 9-period EMA, in the MACD line, and the signal line aims to provide crosses over as an entry trigger. So like I said, the EMA follows the present shift, so it makes it very easy for it to follow the condition of the market. So once the price is going up, it's bound for the MACD lines to follow the price action. So people use this MACDs to search for reversals in the market, like I said. And MACD can also be used as a divergence strategy. What is a divergence strategy? So it's just basically where the price shows a certain direction, and the MACD shows a different direction, shows an opposing direction. But don't get it twisted. Don't be confused. They are both giving the same signal, but to the naked eye, for the people who are not much advanced in Forex, you might think that, okay, and the picture you're seeing here, that the line shows that it's going up. but then in the MACD, it shows that it's going down. Now, the MACD, like I said, is a momentum signal. So it's obviously trying to show you that there are no longer buyers in the market and there's exhaustion of buyers. So even if you can see that the next price action is slightly above the previous one, but it doesn't come with enough strength. Like I said, the MACD is a momentum indicator. So it calculates the strength of the market. So it's looking at the price action and it's telling you that there is no longer buyers left in the market. So there's no strength. So you can see that the price action shows a trend upwards, a slight upwards in degrees, and the MACD shows the opposing one. So it shows you an exhaustion signals. So some people trade divergence because it's very easy to know that, okay, the buyers are exhausted, so we can go for sell. So you can use a MACD for a divergence strategy if you wish. Now, how can you use this moving average convergence divergence with an indicator? Most traders, experienced advanced traders, use a 200 moving average EMA to be specific, exponential EMA 200 with the MACD as a support, as a supportive indicator to the momentum indicator, or the oscillator rather. So it shows it that the moving average, the EMA to 200 moving average, comes as a support. It comes to show you the direction of the trend, and then the MACD shows you the momentum towards the shift of the trend. So as you can see, we are in an uptrend from the 200 moving period average, which I have explained to you in my moving average class. If you haven't listened to my moving average class, go to my moving average class, try to understand exactly how moving average can be used as support, resistance, and to identify trends. So once you know it, it's very easy to understand this one. So we have the 200 moving average comes as a support in this one, signifying an uptrend. And then you can see that the price falls on the 200 moving average. And if you can see on the MACD, it falls on the zero line. And then the MACD, like I explained to you earlier in the previous slide, the MACD crosses the signal line towards the up direction. Whenever the MACD it's above the signal, it means that it's a bullish sign. And now you can see that it falls on the 200 moving average and it comes as a support. Like I explained to you about support and resistance in my trend line, support means it's holding something. So obviously it's not bound to fall. So now we have a support confirmation, and then we have a MACD confirmation saying the cross of the indicators, and the MACD above showing that there's a strong momentum of bullish signal in the markets. So you can confirm that there's a support to hold the price from falling, and then there is a momentum indicator that shows, okay, the support has enough strength to push it to the upside. So once you have that, you look for a bullish signal, you go for a buy, and boom, you make a lot of money. Like, it's really that simple. Now, how can you set up a MACD indicator? Very simple. Go to the indicator. You just scroll to the indicator on the top of your trading view. Once you click on it, you see the search icon. You type on the moving average convergence divergence. Like I said, you can favorite them so you don't have to look for them like I always do. Favorite the moving averages, and then you click on it. And as soon as you click on it, you automatically have it on your screen, a MACD. And then you apply your moving average for your support and resistance to identify the trends. And with these two simple indicators, you can make a fortune. So thank you. I'll see you in the next class.